Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this particular video, we are going to be discussing the today trend indicator. All right. Yeah, you had that right. Today trend indicator. That is the name of the indicator. Okay. So as the name implies, the indicator attempts to predict the trend for a day, for that particular day. All right, so that is what the indicator aims to achieve. It predicts the direction of the trend for that particular day so that traders can make their decisions accordingly, right? So I'm going to be adding the indicator to the chart right away. It's a custom indicator, meaning that you will need to download the indicator from an external site before adding it to your chart, which is after you must have pasted the indicator file in your MetaTrader indicators library. So as we can see, this is the daily time frame. All right, this is the daily time frame. You can see that the indicator attempts to predict the direction of the trend for that day. Okay, so this indicator does not guarantee profits. All right, as we can see, there were some signals that did not play out as expected. All right, there are some signals that did not play out as expected. So the indicator is not 100% accurate. There are some false signals sometimes. Okay, now because it is an indicator that attempts to predict the trend for a day, the indicator will be best suited for day trading strategies. All right, it will be best suited for day trading strategies. So when the indicator predicts at the very start of the next trading day, we can see that the indicator, okay, let's just look at a couple of examples. Let us start from here. Okay, let's start from the one that was correct. So we can see that this prediction was correct. The indicator predicted that this day would be a bearish day, right? And you can see that the day was a bearish day. So after getting the signal, you can go ahead and enter a sell trade. All right. Once you enter a sell trade, pay attention to resistance levels on the daily time frame. As you can see, there was a rejection here, there was a rejection here, rejection here, rejection here, rejection here. So this was a notable resistance level. So after entering your sell here, you should set your stop loss above a notable resistance level on the daily time frame. Okay, on the daily time frame. So after doing that, wait for the day, the trading day to close. All right, it's a day trading strategy. So you enter at the start of the day and exit at the end of the day, right? Or rather at the start of the trading day and exit at the end of the trading day. So once you enter the trade, once the signal has been generated, you set your stop loss above a notable resistance on the daily time frame, and then you exit at or towards the end of that day. So if we had taken this signal, we would have caught about 300 pips. All right. The next day, the prediction was also accurate. Right, the prediction was also accurate because in this case, we would have entered a buy and set our stop loss below a notable support. All right, so we can see we had a notable support zone around here. See rejection here, rejection here, rejections here as well. So it would have been a good place to set stop loss below the previous day's low, right? Below the previous day's low and actually below this support zone. So after entering our buy, then our exit is going to be towards the end of the day. So we would have exited somewhere around here as the day was coming to an end. So we would have caught somewhere around 110 pips, right? Now the next day's prediction was a sell, and we actually had a sell. We had a very significant sell, right? But it seems like there was something that affected price movement, which resulted in bullish momentum swallowing up the entire sell move. As we can see, this is a very long week, and this is the daily time frame, right? This is literally the daily time frame. So this week is about 230 pips long. There are 230 pips or 240 pips long week. So that's a big one. So if you had entered a sell around here and you had set your stop loss, let's say, let's look for notable resistance points. Okay, this is a resistance here, but the entry point is above that. Let's look for another one. Let's see, we had a rejection here. Right? So this would have been a good place. So our stop loss should have been above this resistance, right? So if we had entered a sell here, set stop loss above this resistance, then our take profit can be towards the close of the day. But now, because of this situation, I would say you can just use risk to reward ratios instead, or use support and resistance zones instead to exit. You don't have to necessarily wait till the end of the day in case of if something like this happens. So in this case, if we are using support levels, we should have considered exiting either here or here or here. So you have to be watching out for price activity during the day. Okay, just be watching out for price activity during the day so you will know if a possible reversal would happen, like what happened here. So if price continues breaking through these support levels, you can keep on trailing your stop loss until the day comes to an end, then you exit. All right, so same thing would have happened here. You enter a buy, this would have been the first profit target. The second profit target will be here, although the day closed before it got to the second profit target. Then here would have entered a sell, set stop loss above the resistance. This would have been the first profit target. This would have been the second profit target. And perhaps we would have noticed a reversal beginning to happen. And remember, I said trail your stop loss, okay? So as we are trailing our stop loss, as the reversal happened, we would have exited the trade in profits. Our trade stop loss would have closed the trade in profit, okay, in order to safeguard your profit against situations like this. All right, then the next signal was not accurate. As we can see, it predicted a sell for that day, but we had a buy. The next signal was not accurate as well. It predicted a buy, but we had a sell. So do you see the reason why good risk to reward ratios are important? So that when the predictions are right, you will make good amount. When the predictions are wrong, you would lose smaller amounts. So if we had made, let's say we are always risking $10 as an example. If you are always risking $10 and we had risked $10, remember that your risk, the amount you are risking will determine your stop loss. Okay, so let's say we are risk $10, we entered here, we risked $10, which will be about, let's say 80 pips was our $10 above this resistance, and we ended up capturing, let's say we ended up capturing, even if it is 2,000, so 2,900, we ended up capturing 2,900 points. That's 290 pips. So if you are risking 80 pips to make 290 pips, that's going to be a risk to reward ratio of about 1 to 3.6. So if we had risked $10, we would have made about $36 in this trade, right? This particular candle. Now, for the next day, our risk would have been about, let's say, about 60 pips, right? Because that's below the support. Let's just say about 60 pips. And our potential profit in this case is about 120 pips. So if we had risked $10, we would have made extra $20 because our risk to reward ratio was 1 to 2, and we actually had a good trade here. So add $36 made from the previous day to the $20 made from this day, that's going to be $56, right? So in this case, because we are always sticking to risking $10, okay, keep your risk steady, all right? So this day, the predictions didn't go well, so we would have lost $10, all right? Okay, we actually had, like I said before, in order to safeguard your profits, and prevent such things from happening, we would have been trailing our stop loss. So this day would have still been a win for us. So we had risked $10 and would have potentially made about this would have been a risk to reward ratio of 1 to, because our $10 would have been a risk of, let's say, 60 pips, right? So 60 pips to make about, let's just say, 120 pips, right? Let's say our trailing stop loss closed the trade close to this support, so we would have had extra $20, right? So that would have been about $76 made in 3 days. So the next day was a loss, right? So we would have lost $10. So that would have given us, our $76 would have reduced to 66, right? The next day was also a loss. Our 66 would have reduced to 56. The next day was also a loss. Our 56 would have reduced to 46. So in this case, we had 3 winning days and 3 losing days, but we still had $46 in profit. So do you see the importance of good risk to reward ratios? We had 3 winning days and 3 losing days, but we are still $46 in profit. And as you can see, the next day was a win. All right, the next day was a win, although the other day was a losing day. But the importance of risk management would have made you to still be in profit despite, some days being winning days and some days being losing days. So in as much as this indicator is not accurate, it's not 100% accurate, it can give you insight into potential direction of price for that day, okay? But do not rely on the indicator alone, all right? In order to increase your chances of success and reduce your chances of following a bad signal, always confirm the signals with other indicators, okay? In addition to price patterns, like chart patterns, candlestick patterns, and the rest. So make sure you always confirm your signals. For example, you can decide to use signals like maybe the RSI or stochastic oscillator or moving averages, any indicator of your choice. So whenever the indicator gives you a signal, any indicator you are using, because remember that this indicator predicts trend direction for that day, so you have to make use of an indicator that can react fast to price changes, okay? So that you can potentially use it to also confirm the prediction for that day. For example, if you are using the moving average, you might want to reduce the period. And even in reducing the period, moving average might not be exactly the best confirmation indicator for this today trend indicator. The reason is that moving average is a trend following indicator. So it will likely show you the overall trend. And in this case, the overall trend is a sell. So moving average is not exactly the best indicator to confirm the signals from the today trend, from the today trend indicator, okay? So instead, you can try out an indicator like the parabolic SAR. Let's see how the parabolic SAR is going to react, okay? Right, the parabolic SAR also is a trend following indicator, it might be a bit challenging to get an indicator that can effectively confirm the signals from the today trend, because today's candle might be sell, tomorrow's candle might be buy, the next tomorrow's candle might be buy, the other day's candle might be sell, whereas we are generally in a sell trend. So that's going to make it quite difficult to get, some indicators that will actually confirm each day's signal, because most of these indicators, they are probably trend following indicators or momentum based indicators or volatility based indicators. So they might be giving you general overviews. All right. So instead of relying on other indicators, pay attention, very, very close attention to price action. Okay. If you go to smaller time frames, you'll notice that the today trend indicator also displays some important levels. All right. It also displays some important levels. Okay. But our focus is actually on the direction of the trend for that day. Okay. That's like the main function of the indicator. But even if you want to get precise entries within the day, you can then go to smaller time frames and pay attention to these levels that are generated on the chart. Okay, so in confirming signals from the today trend indicator, I recommend paying very close attention to horizontal support and resistance levels, and then generally pay attention to price action, chart patterns, candlestick patterns. So for example, if the indicator predicts that today is going to be a buy, look at smaller time frames, analyze how price is reacting on the smaller time frames. Check if there are bullish candlestick patterns, check if there are bullish chart patterns, in order to confirm the bullish prediction for that day. That is, if the indicator predicts a bullish day, look out for patterns that could validate that bullish prediction. If the indicator predicts a bearish direction for a day, look out for potential, bearish reversal patterns or bearish candlestick patterns or chart patterns that could validate that bearish signal. All right, so always pay attention to confirmation price actions, right? Bullish confirmations for bullish predictions, bearish confirmations for bearish predictions. All right, in order to reduce the chances of false signals. Okay, so overall, make sure you always make good use of risk to reward ratios. Okay, and make good use of risk management. Do not trade an amount you can't afford to lose, and always ensure that you make use of stop losses and take profits. All right, they are very important. So I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos like this. In the meantime, thank you for watching and happy trading.